Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by. I'm checking out the Market Chameleon pre-market show with this man, Mitri Pargamotic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker dealer. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me share my screen. While I'm sharing my screen, if you guys are joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on the show and ask your question live, we provide a link to Zoom. Click on that link. It's in a live chat on YouTube. Click on it. It takes you over to Zoom. Once you log into Zoom, there's a button there at the bottom of your screen that says raise your hand. Click on that, and you don't have to turn on your video camera. It'll prompt you if you want to. Once we let you in, you could ask your question live and direct. If you prefer to type your question in the live chat box, you can type that question in. Will's watching it, and he'll read it back to me. So what we'll do for now is, while we're waiting for more people to join and for people to put their questions in, we'll start out taking a look at the pre-market report, see if we can get some insights, what's trading in pre-market hours. Then we'll take questions. We did push out some new features last week's, and if we don't get questions, I'll just navigate there and kind of continue on explaining some of these features. They're still in the works. We did have to publish them out a little bit earlier because of other things we needed to publish at the same time. So we did make them available to everybody right now. You guys could start using them while we continue to work on building it up. And the one I could talk about today are the VWAP tables that we have. They show minute-to-minute VWAP and what kind of insights you could get from that type of data. We'll take an example and see if we could paint ourselves a picture of what might have been happening in a particular stock based on that minute-to-minute VWAP table that we published. Okay, so let's start out with the pre-market report. And these are stocks trading in the pre-market hours. We have a list of our most active stocks, a list of our biggest percentage gainers in the pre-market, biggest percentage decliners. I'm coming down here, I see 47 stocks made our percentage gainers list, 36 on the decliners. So from this perspective, looks like slightly bullish bias at the open. But if you look closer at the list, you'll see that there are small cap stocks in there, ETFs, leverage products, pretty much anything that's listed on the major U.S. exchanges. If it's trading in pre-market hours and it meets our thresholds, it can make this list. So from this larger list, we'd want to filter down stocks to a smaller group of stocks to get insights from that. So let's use the filters here above. I'll use this one in ETF. Click on that, drop it down, you get a list of ETFs to choose from. You can see the top three, those are the broad-based ETFs. Then you got your sector ETFs. Let's start out SPY. And you click on that. When we do that, the list below will get filtered by stocks that are holdings in the SPY ETF. One I chose here, which are the S&P 500 constituents. And here you see 12 stocks made our percentage gainers list, 10 on the decliners. Pretty even from that perspective. Just looking at the top of the list, JP Morgan and First Republic Bank here. That was the big news because JP Morgan over the weekend made a deal with the FDIC to take over the bank, and basically now, that's become part of JP Morgan. So that would be like the third third bank to fail this year. JP Morgan takes it over. So I think that, at least that eases some fears in the market about that situation. And of course, I believe that the equity holders get wiped out in this situation, and the preferred stockholders get wiped out. That's my understanding, but I'm not sure. The stock here is still trading at $2.30. Maybe there's something else in the deal that will give equity holders some kind of payment, but I'm not sure. That's not what it sounded like over the weekend. It sounded like they're just going to take it over from the FDIC, because the FDIC took it. I think the way it worked is the FDIC took it into conservatorship, and then JP Morgan bought it from the FDIC. Is that how the?
Yeah, I think you're right.
Yeah. So I'm not sure. Yeah. I'm not even sure, why the stock is actually being traded.
Well, listen, people who've been short also may not want to carry their shorts, right? On their balance, on their sheet.
Yeah. So maybe the exchange is giving them a day like to cover shorts and do that. But yeah, but it's not sure what's going on with the stock there. It's interesting, $2.30 though. So let me see. It's 9:08. If there are no questions,
Robert Black also was saying that the bondholders are going to be wiped out.
And the bondholders potentially, yeah. I think for sure it seems like that the common stockholders and the preferred stockholders are wiped out, because this JP Morgan made a deal with the FDIC. This isn't
they wanted it for free.
Yeah, they wanted it for free with some guarantees from the FDIC. I believe that FDIC is sharing in some of the potential losses in this deal. And
what's amazing is I don't think these are loan losses, right? I mean, I may be wrong, but these are, they couldn't meet the withdrawals of people.
Yeah, they couldn't. Right. Yeah, there are a bunch of things going on there where they're holding on to assets that are getting marked down, and they're getting withdrawals, so they can't sell those assets at prices that they bought them at. So to meet those withdrawals, they just don't have enough to meet all those withdrawals. And I believe it was like a pretty significant amount of withdrawals even after that $30 billion injection. So yeah, we'll see how this stock plays out. And I think the danger of being short a stock that gets delisted is that when you're short a stock, it gets delisted, you have that stock in your portfolio, but you cannot close out of it
forever.
Right? So forever. So what happens is you have this position that, in theory, you want the stock no longer exists. Could go away, and all this, but you still have it on the sheets that you need to cover. It's still kind of sitting there in your account, and what will happen is that you'll get assigned some kind of a haircut on that short,
which will last forever.
Which could last forever. So this could be a problem for people who just want to take it off their sheets and said, that's it, I was shorted, I want to get rid of it. Look, if you have options in it, you might want to close out of it as well, because if the stock gets delisted, let's say you have a deep in the money put, and at $10 or $12, whatever, if you have that deep in the money put going out 3 months, 4 months, 5 months out, and this stock gets delisted, well, what do you do? Because if you exercise the put, right, at expiration or whatever, well, you're short the stock because you want to exercise, right? So it's you're $10 in the money, $15 in the money. You can't give it up. So you're shorting it. So all of a sudden you're short the stock, but there's nowhere to cover it. You can't go out and buy the stock anymore because it gets delisted. So maybe today would be, a good day if they allowed the markets to open and trade, to really just take your positions off, right? Just go to zero. It seems like the story has already, like reached its conclusion, right? JP Morgan's taking it over. So that's one of the things that to look out.
If you have a long dated option and the stock is delisted tomorrow, what happens to those long dated options?
Right. So this is how does the SEC treat it? Or the OCC treat it? So I'm going to go right now to FRC, and hold on a second. Get an error here. So let's say you go to these options, right? And you have options that are long dated. So you could see here, June, whatever, goes all the way out to July 2024. And when the stock, here you go, you see there's going to be open interest here. So you got open interest, all these puts here have open interest. And if you're long this put, well, the OCC, once the stock stops trading, right, it gets delisted. But this isn't a cash takeover. I don't know how they're gonna. If it's a cash takeover, they might just settle it for cash. But what if they don't settle these options for cash? That means you exercise it. You're short the stock. Automatic exercise. All of a sudden, you have a short. You have a short position on your books, in your account, but there's no way to cover it, right? Once it gets delisted, you just have the short position. There's no way to cover it, and there's no way, even though you won, and the stock is zero. The problem is that your brokerage firm, okay, here it is. Maybe it's halted. I don't know. Maybe they stopped it. But let's say that the stock is marked at zero and these puts are in the money, you exercise it, and it looks good, but your brokerage firm might not let you take that money out because they said, but you didn't cover your position. We can't let you take that money out because you still have open risk. And this is an issue, with it. And sometimes they could find people within their own internal brokerage firm that they could offset shorts and longs. So they'll have people that they'll offset, and then your balance is zero. Then you could take out your money. But if not, you have that risk, right? You have that risk involved that you can't. From the long side, you don't, right? From the long side, you could just mark it at zero and say whatever, right? But that's not a problem if you're long the stock. You could always sell it at a cabinet or whatever. They have a mechanism for you to sell your long. There's no mechanism to cover your short once this situation happens and it goes to zero. Theoretically, they should do a better job at it, but this could be a problem. I'm not sure if this halt, if they're going to reopen it. I'm not sure what the deal is there. They might allow another day of trading just to close out. But something to be aware of. Let's go to
we did have a question, actually. Sorry about that.
Yeah.
It was from let me go back. All right, it was Askar was asking, hi, short buildup in calls is bearish, right? That was his question. So it's a short buildup in calls bearish. I asked him what report he was getting that from, he didn't reply.
So,
That-
right. So when you look at the options market, right? I'll go over here. Let's just go to the options chain here. And I'm going to come out here and let's just take a call, for example, here. If people, let's say, are a lot of incoming orders are selling calls, right? A lot of incoming orders are selling calls. And the buyers are the broker dealers. Well, at that moment, the sellers of the calls are creating a pressure on the dealers who are buying the calls to offset that delta, which would mean that immediate effect. If they wanted to hedge that delta, they would have to short the stock or do something to take off that delta risk. In other words, that you have incoming orders, and if the incoming orders from the end users are selling calls and the dealers are buying the calls, well, the dealers all of a sudden have one of the risks they have from buying an option is the delta, which could immediately be offset by selling the stock by the amount of the delta. So that's kind of the immediate effect. Does it mean that in the long term it's a bearish thing? Not really, because why do people sell calls? And it could be for many reasons, not necessarily because they think that the stock is going to just collapse and drop and go to zero. It's not like that kind of bearish. It's people sell calls for different reasons. One is that they think that the premium could be too high, the implied volatilities could be high. They could be selling it against long positions that they have, and one of the ways is by selling calls. So people can be selling calls. Buy rate strategy is very popular. You own stock and you want to collect some premium against stock you own. You sell calls. Does that mean that it's like a bear signal to go and sell the stock because it's necessarily going to go down? No. It's just that's a strategy people use in their overall portfolio. So the risk, it could be used as part of risk management. So when you say bearish, it's not like, whoa, sound the alarms, people are selling calls, the stock is gonna, it's gonna go out of business like FRC. It's not like that bearish. It's more of, what are the immediate effects when people are selling calls? Well, the act of selling a call, creates a bearish delta, right? A negative delta at that moment. But it's not something like where this is so unusual where it's like sound the alarms. It's not like missing earnings or that there's going to be a default or anything like that. So it's not like a bearish signal exactly on the stock. It's just you're looking at what the players are doing, how they're behaving, and in the overall market, how are people positioning themselves? So to answer your question, it does create the immediate effect would be, it's like selling a stock. Somebody sold, just selling the call without hedging it. It creates kind of like a bearish pressure on that stock same at that moment, but it's not necessarily like something that's bad happening fundamentally to the stock, right? It's not something that's fundamentally making the stock bearish, like, on earnings or anything like that.
All righty. Perfect.
Okay. Let me take a look at the price action analysis. So we went over.
Hey, D, it sounds like your mic has gone a little underwater.
Okay. Let me see. Is that better? Better. All right. So last week we kind of went over some of these features that we're pushing out, and the features are trying to break down the volume in the stock. All right, so I'm going to take Microsoft as an example. I started with Microsoft last week. I'll just continue on with it. And when we take the volume in the stock, we know the top line number, which is the total, let's say the total shares that traded. But then if we want to go deeper in and try to get insights, well, what happened, during the day? How did it trade? Who might have been trading? What maybe they were doing? We would need to go deeper into the details. And I'm going to go back to, this is just today, so let's just go back to the previous days. And you keep digging deeper and deeper and deeper into the details, right? So you start at the top, you get a top number, then you start digging deeper and deeper to get into, more insights. So we talked about last week that there are essentially 5 different trading sessions going on throughout the day. We just talked about the pre-market, right, which we're in right now. These are pre-market. This is happening prior to the open. Right now, people are trading, and we did discuss differences between pre-market, opening, regular, cross, but I'll do a quick recap. Who's trading in the pre-market hours? Usually these are more active traders who are self-directed, reacting to real-time news and data. All right. So these are not your typical VWAP orders that mutual funds and institutions put in because they need to accumulate. These are not people that are reacting to an options trade because the options are not trading right now, right? They could be maybe hedging their previous positions, but they're not, reacting to, incoming options trades. These are because the options are only trading during regular trading hours, so we know they're not like hedges coming in here. And we know certain players cannot trade in a pre-market. Mutual funds cannot trade, and certain institutions cannot trade in a pre-market. Okay, they have to wait till regular trading hours to trade. So what we're, and if you're buying Microsoft in the long term, you're not opening up your RIA or your pension and they're opening pre-market, getting approved for pre-market trading to do it. Then you could buy it anytime during regular trading hours. So these are typically very active traders who are running models on real-time data or news, and they could be either repricing it based on fundamentals, based on certain news, based on their anticipation of where the market's going to go for the rest of the day. They could be trying to get out of, some positions that they're holding and doing it in a pre-market hours. So those are the kind of the insights that we're getting in the pre-market. So we could see here how Microsoft progressed throughout the day, right? So we have essentially the volume, the VWAP price over here. So that's the volume weighted average price, and these bars are the high low. So you get like a range of where it traded in the pre-market hours, the VWAP price, the high low. This blue bar is always changing based on the current price. So this blue bar is telling you where the current price is. So this was the close of Fridays. And the relative volume is based on the relative volume in that session. So in the pre-market, the volume will be less than the regular trading hours because in regular trading hours, you have more participants. Opening cross. So that is based on the people who can't trade in the pre-market or aren't approved in the pre-market or want to wait for the open, they will send their limit orders or market orders to their broker, and that broker sends it to the listing exchange, to the specialist. He matches them up, and there's a single price auction at the open, right? So he'll put it to the price where he gets the biggest matches, and then he'll open it at that price. So that's kind of our first look at people who can't trade in the pre-market or need to trade in regular hours, what the volume was what the volume was at the open, the relative volume, and where the price was. And we could kind of then compare that price to the pre-market prices, how far away were the pre-market VWAPs relative to that opening auction price. Regular trading hours, that's when then everything kind of comes in. So then you got, your institutions, your mutual funds, your VWAP orders kicking in, all your strategies that are pegged to other things in the marketplace, your options trades being hedged, all that stuff, all is during regular trading hours. High frequency traders, passive orders, active orders, all the competing models, that's in the regular trading hours. And of course, we'd have to go into that regular hours and start looking at the details further, but this is what's happening in regular hours. Closing cross, that's after, right at the end, at the close of trading, there's another single price auction. And these are where the specialist receives market on close or limit on close orders. It's a special order type. So it's not an order type where you just put in a limit and you get it. You have to let your broker know, I want market on close or limit order on close, meaning you want to participate on the closing auction. And that exists for a particular reason, because there are certain institutions that have to trade on the closing price, like a mutual fund, for example, that is creating and redeeming units. Those are based on end of day closing prices. They calculate the NAV, and that's where they create and redeem their units. Okay. After hours, that's similar to pre-market, where then you get more active traders reacting to real-time news, data, and information, and their models are repricing the stock in the after hours. All right, so we kind of get a sense of what different players are doing based on that. So then we could go, let's say to regular trading hours. I'm going to look at the VWAP. So this is the VWAP table in the regular trading hours. So you can see, we start from 9:30, and then minute by minute, we give summary statistics all the way up to the end. Then you got the closing price. And within there, we could start finding interesting information by minute. Okay. And this, actually we're at 9:30. So maybe
we had a question that hasn't come up in a while.
Yeah.
Michael was asking, morning, what is the meaning of the check next to the ticker on the symbol list? And I'm assuming that means that you're following it, correct?
Yeah, that it's in your watch list somewhere. So when you create a watch list and you added a ticker to one of your watch lists, there's a check in there saying that this symbol has been already added to one of your watch lists.
Yeah, so if you see, like he's got Microsoft up right now. If you go under it, there's a plus, says add to watch list. If you clicked on that, then it would be added to your watch list.
Yeah, like if you click on it, you could add it to an existing watch list, or you could create a new watch list.
And then anytime you see that ticker again, you would see that it's added to your watch list.
Yeah, just say new watch list, give it a name, and then you could add it.
All right. Perfect job, Dima. Thanks so much. You have a good day, my friend.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day.